With its positive external balances, modest inflation, improved fiscal performance, and sustained revenue streams, the Philippines has become one of the fastest-growing economies and earned a reputation as an emerging economy and investment destination in Asia. Riding high on the promise of a growing economy, the Philippine insurance industry is keeping its positive momentum as it moves towards becoming one of the major pillars of the economy. Working towards making the insurance industry a pillar of the country's economy, the Commission commits to implement prudent and progressive regulatory and supervisory policies that are at par with international standards. True to its commitment to create regulations through innovation and collaboration, the Insurance Commission has worked closely with government agencies, industry partners, and other stakeholders. For the regulation of health maintenance organizations, close coordination with the Department of Health and the Association of Health Maintenance Organizations of the Philippines paved the way to the crafting of pertinent circulars on licensing and development of regulatory frameworks on HMO supervision. For microinsurance, collaboration efforts with key organizations and international institutions such as RIMANSI, ADB, and GIZ has put forward microinsurance as an effective vehicle for financial inclusion. New frameworks on microinsurance were also introduced to develop distribution channels and enhance performance standards through Seguro. For risk-based supervision and other solvency requirements, continuous consultations and dialogues with the Philippine Life Insurance Association, Philippine Insurers and Reinsurers Association, Actuarial Society of the Philippines, and other associations led to the finalization of the significant amendments to the risk-based capital and financial reporting frameworks. Also, the importance and contribution of the insurance sector to the Philippine economy is now recognized in the draft Philippine Development Plan for 2017-2022. The mandate to protect the insuring public and strengthen the regulated industries has continuously been discharged with competence and innovation. In 2016, the Insurance Commission became ISO 9001-2008 certified, serves as proof of the IC's strong commitment to quality regulatory and supervisory services. To ensure technical, administrative, and procedural activities are continually improved, the Commission has instituted a number of innovative projects that capitalize on the advantages associated with digital and information technologies. More than ever, the Commission will be more involved in international negotiations on insurance by signifying active participation in the year-round activities of the Working Committee on Financial Services Liberalization. The Commission will continue to lobby the country's requests and offers under the ASEAN Framework Agreement on Trade in Services to seize the opportunities from the full market integration of the ASEAN Economic Community. In all this, the Commission commits to involve the industry in the process. At present, the national government, led by the Department of Finance, is comprehensively looking at developing a conducive environment for ex-ante financing instruments and risk insurance schemes. In collaboration with other government agencies and relevant funding organizations, a national policy on disaster risk financing and insurance is being crafted. With much interest, the Commission, together with the industry representatives, shall be in the forefront of the realization of a financially sound and sustainable catastrophe insurance pool at the national, local, and individual levels. Because of these accomplishments, the bigger picture looks even brighter. The industry asset size grew by 11%. The life sector produced 12.48% growth, while the non-life sector accelerated by 3.08%. Total assets reached 1.25 trillion pesos in the first 9 months of 2016. Insurance penetration has increased from 1.56% of gross domestic product in 2014 to 1.75% in 2015. Market penetration rate on life insurance coverage reached 41.27% in 2015. Thriving insurance business has translated into increased average spending of each individual on insurance by 15.79% in 2015. Among its ASEAN neighbors, the Philippines, alongside Cambodia and Vietnam, showed the fastest growth in gross premiums at 10.9%. In terms of tax arising from the insurance business, the Philippine government has received a huge contribution. Tax payments collected from life and non-life companies alone have reached 19.38 billion pesos in 2015. This shows an increase of 12.67% from 2014. Indeed, the Philippine insurance industry continues to play its role as one of the major pillars of the economy. On its 68th founding year, the Commission stands closer to the realization of a collective vision. And to this end, the Commission will not cease in pursuing innovation and collaboration.